Asia-Pacific markets displayed varied performances on Wednesday amid global economic developments. Japan's Nikkei 225 came close to breaking its all-time intraday high, buoyed by positive corporate price data. Meanwhile, China's inflation figures for June fell short of expectations, impacting investor sentiment. The mixed results extended across the region. Japan's Nikkei extended gains, rising another 0.25%, while the broader Topix and Hong Kong's Seng index gained more than 1%, reflecting strong market sentiment. Meanwhile, inflation in China rose 0.2% in June, below the 0.4% forecast. However, producer price index fell 0.8% year-on-year, in line with market expectations. The falling PPI reflects lower factory gate prices and signals weaker industrial demand. The mainland CSI 300 index slipped 0.4% on the news. Elsewhere, South Korea's Kospi and Kosdaq declined by around 0.2%, while Australia's S&P 200 declined by 0.47%. Let's get more on this now with Tim Waterer in Sydney. He's Chief Market Analyst at KCM Trade. Thanks for being with us, Tim. Now, inflation in China has edged down last month. What's this telling us about consumer demand in the country?
Good to be with you again. Yeah, that's right. The Chinese inflation numbers stay a little bit disappointing, you'd have to say, coming in just shy of expectations. So what it's telling us is that, at best, I think the Chinese recovery is still very patchy, very up and down. We've had some good months, such as the previous reading. This time around, it's still reflecting that there is some hesitance, perhaps, amongst the Chinese domestic market when it comes to making purchases. And I think we can trace that back to really the troubles in the property sector and the ramifications from that. So, yeah, a little bit disappointing, the numbers today. I mean, the good news is that, yes, they are avoiding that deflationary scenario, which they've been in previously. But, yeah, we'll be watching the numbers very closely in coming months to see if the Chinese economy can gain traction as domestic demand picks up and perhaps these CPI numbers pick up in coming months.
Right, speaking of deflationary prices, PPI has been in deflationary territory for 21 months. What are the risks of extended deflation for the country?
Yeah, the PPI, that's also a worry, as you alluded to earlier. The prices at the factory gate, they're really struggling to keep the head above water. And I think that's, once again, just reflecting that soft demand scenario which is happening in China. Now, of course, we know that the PBOC, they have implemented a number of measures really over the past 12 months to try and kickstart the economy, but there's a little bit still a progress in the works at the moment. So I think we've still got a bit to play out in that scenario there. But I think, in terms of the answer to the question, it shows that, there is still that lack of confidence, I think, both at the factory gate and also on the retail front. And it could well be that if this scenario does, continue, this sort of, languishing economic growth does continue, we may have to see some further measures from the PBOC. They've got a bit more room to move on some of the key lending rates on the downside, so that'll be something to watch going forward.
Right. Meanwhile, in Japan, stocks have reached record highs recently. What's behind the surge?
Yeah, that's right. The Nikkei soaring, and I think we can really look at, the Japanese yen as being a factor behind that. Of course, the yen being in the headlines a lot lately with levels reminiscent of the 1980s. Now, that's working well for parts of the economy in Japan, namely the export sector. So companies that rely on export, we're talking about the car manufacturers, some other electronics companies. They're making hay while the sun shines, based on this weak yen. But of course, we have to remember that there is this risk for Japan of a weak yen that they could start importing inflation, because it's not all about the export story. So right now, the Nikkei really focusing and getting a tailwind from the weaker yen. But if this yen weakness continues, that could pose risks and perils for the Japanese economy going forward. Hence the nervousness among some Japanese officials right now in terms of where the dollar yen rate is at north of 160.